take chapter 7 of company law. We've so far covered chapter 1 up to chapter 6. Now we are taking chapter 7. If you have not been part of us, you can get those classes from our YouTube channel, FATIMA Institute. My name is Williams of FATIMA Training Institute Center for CIFA Studies. My contacts are 0727871093. Now, our next chapter in company law will be company meetings, and that is chapter 7. Subscribe to our YouTube channel so that you may be getting these classes as and when we upload them. Now we'll be taking company meetings, and as I told you in the previous classes, in company law there are specific case studies which you should be conversant with. We've come across a variety of these case laws, such as the case in Salomon versus Salmon, the case in Ashbury versus Richard, the case in Makaura versus Northern Assurance Company Limited, the case in Force versus Aborton, the case in Bangle Press, the case in Trevor versus Whiteworth, and now in company meetings you have a case in Sharp versus Dawes. The case in Sharp versus Dawes explains the concept of meetings. That is our new case study which you should be conversant with. Now, generally speaking, meeting means coming together of more than one person. Ordinarily, you don't expect one person to have a meeting, but as we will see later, there are situations where one person may constitute a meeting. Well, be coming back to that later. Your syllabus requires you to read about nature and classification of company meetings, types of company meetings, we are required to have nature and classification of company meetings, then types of company meetings held to execute various functions of company meetings, the methods of holding company meetings, essentials of a valid physical, virtual, and hybrid meeting, voting, resolutions, and then protection of minority shareholders. That aspect of protection of minority shareholders, we've mentioned it earlier briefly, and the aspect of protection of minority shareholders is explained in the case study of Bango Press. We've done that previously. We should be coming back to that under this particular chapter. Now, I just want to show you briefly what is covered in the company meetings, what your syllabus requires you to go through, and this is what you're supposed to go through. That is company law, chapter 7, company meetings. You'll be taking nature and classification of company meetings, types of company meetings held to execute various functions of company meetings, methods of holding company meetings, essentials of a valid physical, virtual, and hybrid meeting voting, resolutions, and then drafting resolutions and protection of minority shareholders. That is what your syllabus requires you to study. So we'll be taking now, that is what you'll be taking. So we have nature and classification of company meetings, and this we explain by application of the case study in Sharp versus Dawes. Now, as we have said, meeting, where there is a meeting, there has to be more than one person. However, there are certain circumstances in which one person may constitute a meeting, and those are the situations we refer to as exemptions to the rule in Sharp versus Dawes. Now, according to Sharp versus Dawes, the word meeting prima facie means a coming together of more than one person. However, in law, one person can constitute a meeting as well as a quorum for the meeting. So ordinarily, meeting means coming together of more than one person, either 2 people, 3 people, and such. But that's according to the case in Sharp versus Dawes. You cannot have a meeting of one person. Where there is a meeting, there has to be more than one person. That's according to the rule in Sharp versus Dawes. But exemptions to that, if you are addressing the issue of exemptions to the rule in Sharp versus Dawes, you are addressing those matters or those situations where one person may constitute a meeting. So exemptions to the rule in Sharp versus Dawes implies those situations where one person may constitute a meeting. Now, for example, if I'm alone here, can I hold a meeting with a quorum of one person? Can I pass a resolution alone? That's what simply we mean by exemptions to the rule in Sharp versus Dawes. Note that according to the rule in Sharp versus Dawes, a meeting can only be held by more than one person. That is what the rule in Sharp versus Dawes holds. But exemptions to that, meaning situations or circumstances under which one person may constitute a meeting. So, according to Sharp versus Dawes, the word meeting prima facie means a coming together of more than one person. However, in law, one person can constitute a meeting as well as a quorum for the meeting. Exemptions to the rule in Sharp versus Dawes. These are the circumstances where one person may constitute a meeting. So exemptions to the rule in sharp versus Davis means those situations under which one person may hold a valid meeting. So one exemption or situations under which one person may hold a meeting is directors meeting. Where a private company has only one director, that director constitutes a directors meeting. So you may have a private limited company which has only one director. Those resolutions or decisions which should be passed by directors, it implies that since this company has only one director, that meeting will be held by only that one director. So in that case, it will be a meeting even though it has uh, only one person. It's one person having a meeting. So directors meeting. Exemption number 2 is class meeting. We defined what class is in the previous chapters. Class of shares means those shares are held by members whose rights are too similar that they can consult. So a class of shares like ordinary shares, preference shares, deferred shares, or employee shares. So class meetings, if for example, you have ordinary shareholder who has, we have a situation where you have ordinary shares being held by only one shareholder. So in that case, if a decision has to be passed by ordinary shareholders, and you have only one shareholder with that particular class of shares, it implies that that meeting will be held by only that particular shareholder, and it will constitute a meeting even though it comprises of only one person. So, class meeting, where the company's capital has been divided into different classes of shares, such as ordinary shares, preference shares, or deferred shares. If all the shares of a particular class are held by one member, such a member constitutes a meeting of the holder of that class of shares. So in that case, this meeting will be valid even though it will constitute of only one person, because we've given an example of ordinary shares which are held by only one shareholder. So this particular one shareholder will hold a meeting and will pass the resolution. Next is creditors meeting. So with creditors meeting is applicable, or it will arise whereby there is a process of maybe this particular creditor wants to pass a resolution relating to those matters where the company owes this creditor some money. So for this creditor now to pass a decision or resolution relating to these arrears or owings, then he or she will hold that meeting alone, the creditors meeting. If in the course of winding up, only one creditor has proved his claim, that creditor constitutes a meeting. So where there is winding up of a company and decision has to be made by creditors, and you have only one creditor, then this one creditor will pass a resolution, and it will be passed in a meeting which constitutes of only one person. So you can see, even though this creditor is only one person, but he or she is able to pass a resolution. Next is an adjourned meeting. To adjourn is to postdate or postpone. So if we hold a meeting and this meeting does not have the required quorum, then this meeting has to be adjourned. You adjourn the meeting to be held next time. So next time, when we come and then the quorum again is not, we don't miss the quorum and we have only one person, then it implies that this one person will hold a meeting and will pass a resolution. So adjourned meetings. If a meeting summoned by directors has no quorum present within 30 minutes, the meeting stands adjourned. The adjournment is made by the members present, including one member present in person or by proxy. Number next is AGM summoned by the registrar. Annual general meeting summoned by the registrar. So if the Register of Companies has summoned an annual general meeting, and in this meeting only one person attends, then this one person can pass decisions and resolutions when he or she is alone. So AGM summoned by the registrar. If a company fails to hold annual general meeting, any member may petition the registrar to call or direct the calling of the AGM. Such a meeting is duly constituted by one member present in person or in proxy. A proxy is a representative. And lastly, general meetings summoned pursuant to a court order. So any meeting which has been summoned by court order, if in that meeting which has been summoned by court order, only one person attends, then this one person can pass resolutions and decisions, even though he or she is alone. So these are the situations under which one person can hold a meeting. Circumstances under which one person can hold a meeting and pass resolutions. And these are known as the exemptions to the rule in Sharp versus Davis. Next is purposes of company meetings. What purposes do company meetings have? One purpose of company meetings is to comply with the statutory provisions. As we look later on about types of meetings, and you find there is what we call statutory meeting, which should be held by a company once it has been incorporated. Okay, so to comply with the statutory provisions, there are those laws which provides that companies should have certain meetings. And if companies do not have these meetings, it implies that the company is in violation of the law. If a company does not hold annual general meeting, then it is in violation of the law. So one purpose why companies should hold meetings is to comply with the law. So to comply with the statutory provisions is one purpose. Number two, to transact businesses which may only be transacted at a general meeting, e.g., approval of dividends. There are certain transactions which can only be done or passed in a meeting, like in AGM. Things like declaration or approval of the dividends can only be done in the annual general meeting. There are those matters which can only be passed in a meeting, and that becomes another purpose why companies should hold meetings. So to transact businesses which may only be transacted at a general meeting, e.g., approval of dividends. Purpose number 3, to transact business which may only be transacted at a meeting of a class of a company members. A class like, for example, ordinary shareholders, preferred shareholders. There are certain decisions which can only be, there are certain matters which can only be done in a certain class of shareholders like ordinary shareholders members or ordinary shareholders or preferred shareholders. So if a transaction can only be undertaken in ordinary shareholders meeting, then it implies that a meeting has to be held by a class of those shareholders who are represented in that particular class of shareholders. So to transact business which may only be transacted at a meeting of a class of a company members. And lastly, to enable directors and members exchange views regarding the running of the company affairs or resolve some existing disputes. So you look at the rule in Sharp versus Davis, which I've said. The rule in Sharp versus Davis states that meeting is coming together of more than one person. Exemptions to the rule in Sharp versus Davis implies circumstances in which one person may constitute a meeting. So you can just have that. If you have not written, you pause your video and you can write. You can have the rule in Sharp versus Davis. Exemptions to the rule. You have directors meeting. These are exemptions to the rule in Sharp versus Davis. You have directors meeting, class meeting, creditors meeting, adjourned meeting, AGM, that is annual general meeting, summoned by the registrar, then general meeting summoned pursuant to court order. These are exemptions to the rule in Sharp versus Davis. Then purposes of company meetings, we have 1, 2, 3, and the fourth one is on the other side. The fourth one is on the other side. Now I move to types of company meetings. I move to types of company meetings where we have statutory meetings. Then we have annual general meeting. Then we have class meetings and extraordinary general meetings. And we have types of company meetings. Types of company meetings. Number 1, we have statutory meeting. Then we have annual general meeting. This is called AGM. And then we have class meeting. And then we have extraordinary. extraordinary general meeting. These are types of company meetings. Types of company meetings. We have statutory meeting, annual general meeting known as AGM, then class meeting, and extraordinary general meeting. We discuss each one of them at a time, starting with statutory meeting. A statutory meeting is available with respect to public limited companies. Once a company has become publicly limited, it should hold a statutory meeting. So a statutory meeting is only held once in the lifetime of a company. In the lifetime of a company, a statutory meeting is only held once. We look at objectives or the purposes of statutory meetings. So I'm looking at statutory meeting. Every public limited company must, within a period of not less than 1 month and not more than 3 months from the date at which the company is entitled to commence business, hold a general meeting of the members called statutory meeting. Objectives of statutory meeting. Number one, to receive the statutory report from the directors, which must be forwarded to the members at least 14 days before the date of the meeting. Objective number two, to give members an opportunity to discuss any matter relating to the formation of the company or arising out of the statutory report. Number three, to give shareholders an early opportunity of obtaining information as to the circumstances of the company formation. So I have three objectives of statutory meeting. From there is the contents of statutory report. Contents of statutory report. Number one, total number of shares held. Number two, total cash received with respect to the allotment. Number three, names, postal address, and description of directors, auditors, and secretaries of the company, if any. Number four, particulars of any contracts made, if any. Number five, abstract of receipts and payments made by the company up to the date of the report. So that is it about statutory meeting. So you should know that statutory meeting is held only by public limited company once it has been incorporated, and it is only held once in the lifetime of the company. So you can have those notes if you are writing. Statutory meetings. You can go through statutory meetings. You look at these objectives. The meaning of statutory meetings is here. And then objectives of statutory meeting. And then contents of statutory report. The contents of statutory report. Now I go to the next type of a meeting. And this is annual general meeting, that is AGM, the annual general meeting. This is a meeting held by companies each year to consider ordinary business. So whereas the first type of meeting, statutory meeting, is held once in the lifetime of a company, specifically public limited companies. Annual general meeting, these ones are held once per year, at least once per year, or just once per year, to discuss the ordinary business of the company. Every company shall in each year hold a general meeting as its AGM, in addition to any other meetings that year, and shall specify the meeting as such in the notices calling it. Not more than 15 months shall elapse between the date of one AGM and that of the next. Agenda of the AGM: confirmation of minutes of the previous meeting, election of directors in place of those retiring, consideration of audited accounts, appointment of new directors, declaration of dividends, and AOB, that is any other business. So you can look at the meaning of AGM, the annual general meeting, which is held once per year, and matters which are discussed, or matters, the agenda matters. So you have annual general meeting, you have the meaning, agenda of the AGM, or matters which are discussed during the annual general meeting. So we have annual general meeting, matters which are discussed in that particular meeting. We go to the next type, the last two now, just move faster. Class meetings and extraordinary general meeting. You first pause your video and you go through this, what class meeting is, what extraordinary general meeting is. You can pause your video and look at what is class meeting, and what is extraordinary general meetings. Now, we said a class of shares, which we discussed last time. A class may comprise of ordinary shares, preference shares, deferred shares, employee shares. So a class meeting is a meeting held by shareholders who hold shares with the same rights, e.g., meeting of ordinary shareholders or preference shareholders. That will constitute a class meeting, because these people have the same rights. You can have a class meeting of ordinary shareholders, a class meeting of preference shareholders. So you cannot have a class meeting comprising of ordinary shareholders and preference shareholders. So it has to relate to just one class. So class meeting is a meeting held by shareholders who hold shares with the same rights, e.g., meeting of ordinary shareholders or preference shareholders. Class meetings are not mandatory, but they may be held by the company to discuss issues affecting a certain class of shareholders. The meeting is usually held when it is proposed to alter or vary the rights of a particular class of shareholders. So the major reason why class meeting is held is when there is need to vary the class rights of these shareholders. It is out of that where we discuss now the protection of minority rights through the application of the case in Bango Press, which will be coming back to the same later. So class meeting, we have discussed that. The last is extraordinary general meeting. The extraordinary general meeting is all general meetings other than AGM are called extraordinary general meetings. It is a general meeting which a company may hold anytime when need arises. It may be summoned by directors or pursuant to a court order. So, extraordinary general meetings can be held anytime to discuss any emerging issues. They can be held anytime, or basically, we are saying any meetings other than the annual general meeting, which can be held anytime to discuss emerging issues of the company, are known as extraordinary general meetings. Now, from there, there are such notes that I just present to you, and you go through them. Methods of holding companies meetings. Here I have informal meetings, formal meetings, functional business meetings, downward briefing meetings, shareholders meetings. These are not quite necessary as far as your company law is concerned. The ones not much important, I just present to you, can go through this. Methods of holding company meetings. I'm saying these are not, but because they are part of my notes, you can just go through them. You can pause your video and you check this. Informal meetings, formal meetings, functional business meetings, downward briefing meetings, shareholders meetings, extraordinary meetings, committee meetings, brainstorming meetings. Now, these are not important meetings as far as company law is concerned. Now, you can still have, again, not important, the stand-up meetings. I just pause your video and you go through this. These are not, they are not much important, but just use them to widen your knowledge. The most important meetings I have discussed: open space technology, tech focused, tech free, mindful meetings. Now, essentials of a valid meeting. Essentials of a valid meeting. Essentials of a valid meeting. I'll be coming back to this. Meaning of a valid meeting. Just go through this. I'll be discussing them in a while. Meaning of valid meetings. Then requisite of a valid meeting. For a meeting to be valid, just to meet these points you see here, requisites of a valid meeting. Just pause your video and you check that. I'll be coming back to essentials of a valid meeting in a while. I will be coming back to that in a while. Just you pause your video and you go through this. I'll be discussing that in a while. Pause your video and you go through these notes. Essentials of a valid meeting. The notice is sent within proper time. All these are essential requirements of a valid meeting. Essential requirements of a valid meeting. I will be discussing them in a while. But first go through them. You first go through them. A meeting shall be properly conducted. Now, virtual meetings, you know what virtual meeting is? Virtual meeting is simply a meeting that happens online rather than physically, with all the participants in the same meeting room. A virtual meeting is done online. It's online meeting. Virtual meeting. Virtual meeting. Also known teleconfrencing. You've done this in ICT. Teleconfrencing, the meaning of teleconfrencing. Video conferencing. hybrid meeting, physical meeting. So check the meaning of this. Teleconfrencing, check teleconfrencing, check video conferencing. You pause your video and you check that. Hybrid meeting and physical meeting. Proceedings at meetings. Now what you've done, what I've showed you there, I can now summarize that for you under the proceedings at meetings. So proceedings, a meeting, you start with a notice. You start with a notice. You can't hold a meeting without giving a notice. So one is notice. Notice of meeting must be given by post through the shareholders' postal address or be served personally to every member. When you are holding a meeting, you've done the types of meetings, whether it is AGM, whether it is class meeting, extraordinary general meeting, you have to give, the company should give a notice to the members through their respective postal address. You have to give them a notice. And because of the changes in technology, maybe you can write them SMS, or maybe you write them email, or you call them via their mobile numbers. But you cannot have a meeting without first having given a notice. Notice of meeting must be given by post through the shareholders' postal address or be served personally to every member. If the notice is not given to anyone who is entitled to attend its proceedings, the proceedings and the meeting are now in void, and the resolution passed at such a meeting are invalid. So if the meeting is not given, if the notice is not given to anyone, so all the members who are supposed to attend the certain meeting must receive a notice. So if you don't give notice to some of the members or some of the attendees of the meeting, even if it is only one person who has not received a notice, then that meeting, even if it has been held, it is not valid. It is null and void. So no decision or resolutions can be passed in that meeting where some members have not received a notice. Nature of notices. Notices must be issued with authority of the BOD, court of law, or the company registrar. Number two, the required number of days of notice must be given to all members. Number three, the notice must state the date, place, and the chairman of the meeting. Number four, the agenda of the meeting. So that is what a notice is. Notice. Then we go to the other. Number two is agenda. Agenda. So all this must be present for any meeting to happen. For us to have a meeting, first there has to be a notice. You have to give a notice to the expected attendees. And then there has to be the agenda. What is to be discussed? Agenda. This commonly applies to the agenda paper, which lists the items of business to be dealt with in the meeting. The agenda is an important document since matters of which appropriate notification has not been given can't be dealt with at a general meeting unless they are of informal character and are only under the A or B heading. The agenda paper is also called the order paper or the order of the business. To contains matters to be transacted at the meeting. So basically, the agenda, which is also called the agenda paper or the order paper, contains the transactions or matters to be transacted in that particular meeting, which matters will be discussed in the meeting. So the agenda, maybe we'll be meeting to discuss about retirement of certain directors, appointment of certain auditors, remuneration of maybe the company secretaries, or things like declaration of dividends. So whatever is to be discussed in the meeting should be contained in the agenda paper. So that is the agenda, simply. Then we have quorum, the other term, quorum. We have quorum. Quorum, now there is that minimum number which is required for a meeting to proceed. If the quorum, for example, is 10 members, if you have less than 10 members, the meeting cannot proceed. If your quorum is 100, if you do not have 100 members in that meeting, then the meeting will not proceed. So the minimum number required for the meeting to start is known as quorum. So quorum is the minimum number of persons who must be present at a meeting in order that it may validly transact the business for which it was convened. The number is generally fixed by the articles, failure to which section 1.4 subsection C of the Act applies, in which case 2 members present in person form a quorum for a private company meeting, while 3 members present in person constitute a quorum in a public company meeting. So, quorum is defined in the Articles of Association. That is the number which is required, the minimum number which is required for the meeting to start. But if that does not apply, then according to the private limited companies, 2 persons constitutes a quorum. For a public limited companies, 3 persons constitutes a quorum, if that is the case. So it is the duty of the chairman of the meeting to determine whether a quorum of members is present by the time the meeting proceeds the business. If no quorum is present, the meeting stands adjourned to the following week. So that is quorum. Next is proxy. A proxy. Next is proxy. Proxy, we have said, means representative. If you have a meeting and you are not able to attend the meeting, you can send somebody to represent you in that meeting. So that person whom you have sent to represent you in that meeting is known as a proxy. A person who represents another in a meeting is known as a proxy. Proxy is a representative. Any member of a company entitled to attend and vote shall be entitled to appoint another person, whether a member or not a member, to attend and vote on his behalf. Next is provisions which govern the appointment of proxy. Provisions which govern the appointment of proxy. Number 1, a proxy is valid for only one meeting. a proxy is valid for only one meeting. So if you send your proxy for one meeting, then that proxy cannot represent you maybe the next meeting. So once your proxy has represented you in one meeting, then that just comes to an end. It cannot come the next meeting to represent you. So a proxy is valid for only one meeting. Number two, a person appointed as a proxy need not be a member. A member is a shareholder. So you need not necessarily be a shareholder so as to be appointed as a proxy. So a person appointed as a proxy need not be a member. Number three, a proxy cannot speak in a public company but can speak in a private company. So usually, I think when we are doing differences between public limited companies and private limited companies, we say that in a public limited companies, a proxy cannot speak. But in a private limited company, a proxy can speak. Number four, no proxy shall be appointed by a member of a company not having a share capital. That is a share capital. No proxy shall be appointed by a member of a company not having a share capital. Number five, a member of a private company shall not be entitled to appoint more than one proxy to attend on the same occasion. Lastly, number six, a proxy shall not be entitled to vote except on a poll. Now, polling you'll be looking at voting later on. How voting is done can be by poll or by show of hands. Okay. Lastly, types of proxy. There are two types of proxies. You have general proxy. Proxies are classified into two, either general or special. We have general proxy, or special proxy. A general proxy is a proxy empowered to vote as he wishes, having regard to the discussion at the meeting. General proxy is a proxy empowered to vote as he wishes, having regard to the discussion at the meeting. That's a general proxy. Then special proxy is a proxy appointed to vote either for or against a particular resolution before the meeting. So if you have a special proxy, he has been appointed either to go and vote against or in support. So when a special proxy is coming to the meeting, he or she has certain instructions from whoever has appointed him or her to represent him in the meeting, either to vote in a certain way. So a special proxy comes in the meeting with certain special or with certain instructions on the direction on which to vote, either vote against or vote for. That's a special proxy. If, for example, we are passing a resolution to remove a director from the office, and I send you as my proxy, I'll tell you, go and vote in support of the removal of the director. That's a special proxy. Or you are told, we have a meeting and the discussion is about removal of the auditor from the office. I will tell you, go and vote in support of the removal of that auditor. So when you come as a proxy to represent me in that particular meeting, you will act just as I had instructed you to act. That's a special proxy. But general proxy, we've said, is a proxy empowered to vote as he wishes. So a general proxy, the general proxy, he will make his own decisions. He or she will listen to what the matter is all about. When it comes to voting, he will vote as he or she wishes. For special proxy, it does not make an independent decision as far as the voting is concerned. He or she will vote as per the instructions from the person who appointed him to represent him in that particular meeting. Then rights of proxy. Rights of proxy. Right to attend the general meeting. Number 2, right to vote in case the voting is done by poll. Then right to speak in case of a private company. You say proxies in public limited companies don't speak. They should remain silent. But in a private limited companies, proxies can speak. So right to speak in case of a private company meeting. Then right to join other proxies or members who demand voting by poll. Lastly is revocation of the proxy's authority. The authority of the proxy may be withdrawn under the following circumstances. 1, if the appointment has been cancelled in writing. Number 2, if the revocation letter has been delivered to the proxy and the company. A proxy cannot delegate his powers to another person. A proxy cannot delegate his powers to another person. That's important. Now, move from there. We go to number 5, and this is voting. That is voting. That is voting. Voting. Remember, decisions in companies are made by voting. Voting. The common rule is that voting should be done by show of hands unless the Articles of Association provides otherwise, in which case each member has one vote only and the proxies can be counted. So generally you can have voting by show of hands. So we are passing a decision, then the question will be raised, how many are in support? So you raise your hands, and those who are in support will count those who have raised their hands. Then, how many are against what we are voting for? Then they raise their hands, and their hands will be counted, and we record. So voting, we are saying the voting, remember, decisions in companies are made by voting. The common rule is that voting should be done by show of hands unless the Articles of Association provides otherwise, in which case each member has one vote only and the proxies can be counted. So you have only one vote, which is equivalent to your hand. Okay. However, Table A provides that a poll, because we are saying voting can be either by show of hands or by polling, by poll. We are saying, however, so voting can be by poll or by show of hands. We are saying, however, table here provides that a poll may be demanded by 1, the chairman. Number 2, at least 5 members having the right to vote. Number 3, members having 10% of the voting rights. Number 4, members holding 10% of the paid up shares carrying voting rights. Okay, you have a question here. What kinds of situations call for a board resolution? A board of directors can decide to write up a resolution for any reason they choose. Think about it in terms of any decision that a board resolves to do. Resolutions can be written for the following reasons. Okay, I'll be coming back to resolutions in a while. I'll be coming back to that, but let me show you that if you are writing, before I come to resolutions, I look at proceedings at meetings. The proceedings and meetings, you expect to have a notice, agenda, quorum, proxy, and voting. If you are writing, you can have that. If you have not written, proceedings in a meeting, you expect to have notices. Pause your video and write notices. Nature of notices. Nature of notices. Then agenda. Write agenda. Pause your video and you write about agenda. Contents of agenda paper. Contents of agenda paper. Look at quorum. Look at quorum. Then proxy. You check proxy. Check proxy. Check proxy. Then provisions which govern. Provisions which govern the appointment of proxy. These are the provisions. We have 1 up to 6. Provisions which govern the appointment of proxy. And then types of proxies. You've talked about general proxies and special proxy. You have general proxies and special proxy. Then we have rights of proxy. Rights of proxy. Then revocation of the proxy's authority. Revocation of the proxy's authority. We go to voting. We go to voting. Then we're asking what kinds of situations call for a board resolution. I've said resolutions, I should take them. I will arrest these notes may be good for you. Whereas this may be good enough for you. But I'll take up from resolutions. I'll take up from resolutions now. I'll move to resolutions. We have resolutions. We have certain resolutions, which we have one ordinary resolution. Then special resolution. We have resolution requiring. Resolution requiring special notice. These are the resolutions that we will discuss. Resolutions. We have either ordinary resolution, special resolution, and resolutions requiring special notice. Resolutions. Company meetings make decisions by passing resolutions. Any decision that a company makes has to be done through a resolution. So company decisions are made through resolutions. Through resolutions. A resolution is proposed, deliberated upon, and voted on. So we have to propose. A member should propose a resolution, then that proposal is discussed, and then after discussion, then there is voting. We said voting can be either by show of hands or by poll. Resolutions are classified into three: either ordinary resolution, special resolution, and resolution requiring special notice. Now we look at ordinary resolution. So what is important is knowing matters discussed or matters which are dealt with through ordinary resolution. Ordinary resolution is a resolution that requires a simple majority of those voting in person or by proxy, e.g., more than 50% of the members present. So ordinary resolution, for any ordinary resolution to go through, there has to be more than 50% of the members present, including the proxy. The following matters require an ordinary resolution. There are those matters which can only be dealt with through ordinary resolution. 1. Election of directors. Number 2. Appointment of auditors. Number 3. Resolution to declare dividends. Number 4. Increase in share capital. Number 5. Authorizing the issue of shares at a discount. Number 6. Authorizing bonus issue. Number 7. Approving accounts. So understand matters which are passed through ordinary resolution. We have a list of them there. We have just I'll present them to you in a while if you have not gotten them correctly for the purpose of note taking. Then we go to special resolution. This is a resolution passed by majority of not less than 75%. So this one, ordinary resolution requires 50% of the members present, including the proxy. Special resolution, this requires more than 75. So if you observe the notes that you have just discussed, you find that ordinary resolution is more to do with matters in the Articles of Association. Matters to do with what is contained in the Articles of Association, like election of directors. If we want to elect new directors, or we want to elect new auditors of the company, then this has to be done through ordinary resolution. But things like changing the name of the company, changing the maybe capital, or changing the object clause, any matter which you find in the memorandum of association, so this you find in, so most of the issues that you find in the Articles of Association are dealt with through ordinary resolution, and those matters you find in memorandum of association, they can only be dealt with through special resolution, and you can see the threshold required. Since we said one of the differences between Articles of Association and memorandum of association is concerned was that it is very difficult to change the memorandum of association, whereas it is much easier to change the Articles of Association. So you can see the threshold required to the special resolution. So a special resolution is a resolution passed by majority of not less than 75% of the members entitled to attend and vote. The notice concerning such a meeting must specify the intention to pass such a resolution as opposed to ordinary resolution. Notice of intention to make a special resolution must be given to members not less than 21 days before the meeting at which it is to be made. A special resolution is required for major changes in the company. Note that. You can write that one as your NB. Note better. A special resolution is required for major changes in the company, such as 1. Alteration of the object clause. Number 2. Change of name of the company. Number 3. Alteration of articles of association. Number 4. Reduction of issued share capital. Number 5. Voluntary winding up of the company. Number 6. Variation of class rights. Number 7. Presenting a petition for an order of compulsory winding up. Number 8. Appointment of an inspector to carry out investigation into the company affairs. Okay, the last one is resolution requiring special notice. Resolution requiring special notice. This is a resolution created by Section 142 of the Company Act. A 28 days notice of intention to make it must be given to the company. The company, after receiving such notice, must give all its members a 21 days notice before the general meeting. On the day of the meeting, the members must pass an ordinary resolution. Sufficient details must be disclosed in the notice, specifying exact nature of the business to be transacted, such that the members shall be able to appreciate the full effect of their failure to attend. This resolution is required in the following situations. So understand. So remember, these are a resolution, that is, a resolution requiring special notice requires 21 days notice of intention to make it. You have to give a 21 days notice. Okay. Matters now which require resolution requiring special notice. The matters dealt with through this resolution. 1. An ordinary resolution to remove a director from the office before his term in office expires. So if you want to remove the director from the office before the expiring of his or her term in office, then such has to be done through resolution requiring special notice. Number 2, an ordinary resolution to remove a director from the office who has attained maximum age limit. Number 3, an ordinary resolution at AGM to provide that a retiring auditor shall not be reappointed. And number 4, an ordinary resolution at AGM appointing as an auditor a person rather than the retiring auditor. And lastly is registration. Registration of resolution. So resolutions have to be registered. So registration of resolution. Certain resolutions must be registered with the registrar of companies. Copies thereof must be delivered to the registrar within the prescribed duration. Under Section 143, subsection 1, copies of the following resolutions must be delivered to the registrar of companies. 1. Special resolution. Number 2. A resolution which has been agreed to by all members, which if not so agreed, would not be effective for its purpose unless passed as a special resolution. Number 3. A resolution which effectively binds all the holders of a particular class of shares, though not agreed to by all. Number 4, a resolution to wind up a company voluntarily under section 271 on the ground of lapse of time or occurrence of an event contemplated by the articles. So before I move to minutes, I'll show you these resolutions. So first understand the meaning of each resolution and matters which are dealt with under all these resolutions. So I'll present that one to you right now. I'll present those resolutions to you. So that should be right. You can write these resolutions. You can pause your video and you write their respective meanings. Meaning of a resolution. What resolutions are. Understand ordinary resolution, special resolution, resolution requiring special notice. So this is ordinary resolution. You understand matters which require ordinary resolution. Should have realized that most of these matters you find them in the articles of association. These are internal matters, internal affairs. Most of the internal affairs of the company are dealt with through ordinary resolution. Then special resolution mostly matters to do with memorandum of association. Note the percentage, the threshold required. 50% for ordinary resolution, 75% for special resolution. So matters to be dealt with, realize that this mostly you find them in memorandum of association, like alteration of the object clause. We continue from the other side. Matters dealt with through special resolution. You have them from the other side. Continuation of matters to be dealt with by special resolution. Remember, special resolution, the threshold is 75%. Then resolution requiring special notice. So the notice of 28 days is necessary. We have them here. And matters now which require this special notice. You have 4 of them here. And lastly, you didn't see well here, just here. Then we have registration of resolution. The registration of resolution, this. Now lastly, I'll move to minutes. I will move to minutes. Minutes is where I go to now. We are through with resolutions. We are through with resolutions. Now we go to minutes. Minutes. Under section 145 subsection 1, companies are required to keep minute books of the general and board meetings and enter therein proceedings of their respective meetings. The minutes must be signed by the chairman of the meeting or that of the subsequent meeting. Such minutes constitute evidence of the proceedings of the meeting. Under section 146, subsection 1, The minute book of the general meeting must be kept at registered office of the company and be open to inspection by members without charge for at least 2 hours every business day, subject to reasonable restrictions as may be imposed by the articles of the general meeting. A member who applies for copies of any minutes is entitled to be furnished with the same within 14 days of the application. It is criminal offense for the company to deny any member the right to inspect the minute book or furnish copies on application. Minutes are simply the notes taken by the secretary to formulate the decisions taken at the meetings. They act as a permanent record for the proceedings. So minutes are taken by the company secretary. They evidence the discussions which occurred during the company meeting. So minutes are simply the notes taken by the secretary to formulate the decisions taken at the meetings. They act as a permanent record for the proceedings. Members of staff and other stakeholders interested with what happened in the meeting can use the minutes as reference. If you want to know what was discussed in a certain meeting, then you can check from the minutes which were taken by the secretary. You can check from the minutes. So minutes should follow the following order: description of the meeting, names of those present, reading of the minutes of the last meeting, matters arising therefrom, correspondence and apologies, A or B, that is any other business, the date of the next meeting. I find a meeting, a minute again. A minute is a record in writing of the proceedings and resolutions of a meeting. The secretary writes them from notes taken during the meeting. They begin by the starting time and place of the meeting, then listing those present and those absent with apologies and those absent without apologies. Preliminaries are recorded, i.e., issues of the main meetings is officially begun. Now we have purposes of minutes. Purposes: 1. To provide a written account of meeting. Number 2. To follow up of any decisions or resolutions made in the meeting. Number 3. For future reference. Number 4. To ensure continuity of the sequence of the meetings. Essential features of minutes should be brief and concise, should be complete, should be in the same order as the agenda, should be accurate, should follow regulations, covering meetings. Now, before I mention some, no, well, I think I didn't, we discussed about voting. Now, before I capture that, just go through minutes. And go through minutes. Just check minutes. You can read from here. You can check from minutes. Minutes. You move to the other side. We move to the other side about minutes. Minutes should follow the following order. You can take this as a definition. We have defined minutes severally. I can just pick one. A minute is a record in writing of the proceedings and resolutions of a meeting. The secretary writes them from notes taken during the meeting. Now that's this minutes. Purpose of minutes. Purpose of minutes. Essential features of minutes. These are minutes. Purposes of minutes. Essential features of minutes. You can look at voting. Now we are done voting, but there are some extra notes here about voting by show of hands and voting by poll. And persons, okay, voting we had done before, but there are some additional notes here about voting. I just check this. Persons entitled to vote in general meetings. Voting may be by show of hands, so either by show of hands or voting by poll. So we have, now these are important points there. How voting by show of hands occurs and voting by poll, how it occurs. It's about voting. We have done voting. We have done voting. So you can just go through that. Voting. Persons entitled to vote in general meeting. Persons whose names appear in the register. Corporations. Proxy acting on behalf of a person of unsound mind. Joint holders or one of the joint holders. The voting may be by show of hands. In this case, every member has one vote. It is the duty of the chairman to count the hands and decide the outcome. Unless otherwise stated, all voting must be by show of hands unless a poll is demanded. It makes all the shareholders equal, regardless of their number of shares, since one vote equals to one person. You see, when it comes to voting by show of hands, one person is equal to one vote. When it comes to voting by poll, it means one share, or basically if you have more shares, your vote is equivalent to the number of shares which you have. So voting by poll may not be fair because the more the number of shares you have, the more the influence you have. If you have one share, you are equivalent to just one vote. If you have 20 shares, then your vote is equivalent to 20 votes. You can see the unfairness of voting by poll. This is voting, so it's voting by poll. So you have said by show of hands, means you raise your hands, the chairman counts your hands, and then one hand is equal to one vote. By poll, it means that your vote is equivalent to the number of shares which you have. So if you have 1,000 shares in a company, when you vote, because you have 1,000 shares, then you say that those are 1,000 votes. So that is where the concept of influence in decision making as far as companies is concerned comes in. So voting by poll. This is voting on the basis of shares held. Each share carries one vote. So one share is equals to one vote. 2 shares, 2 votes. 3 shares, 3 votes. So voting by poll, this is voting on the basis of shares held. Each share carries one vote. Voting by poll is by demand, which may be made by 1, the chairman of the meeting, 2, at least 5 members present in person or by proxy. 3. A member or members present in person or by proxy, representing not less than 10% of the total voting rights of all the members. And number next, a member or members present in person or by proxy, representing not less than 10% of the company's paid up capital. I move to contacting of or contact of meeting. Contact of meeting. Contact of meeting. How to contact company meetings. How to contact company meetings. Now here, you'll be required to know the duties of the chairman, the duties of the secretary. Contact of company meetings. For the meeting to start, the chairman must be present and the quorum must be of the required number before its proceedings can have authority. So for any meeting to start, there has to be, the chairman must be present and the quorum. Quorum, we have said, is quorum means the minimum number required for the meeting to start. Now, duties of the chairman. Duties of the chairman. I'll give you the duties of the chairman and duties of the secretary. Duties of the chairman. Duties of the chairman. We have duties of the chairman there. Pause your video and you have these duties of the chairman during the meeting. Pause your video and have duties of the chairman. The duties are there. Duties of the chairman. 1. Ensuring that the meeting is properly constituted. Ensuring that the meeting is properly constituted. Number 2. Maintaining order during the meeting. Number 3. Ensuring that the orders of the business are adhered to. Number next, ensuring equal opportunities of each to all the members present. Next, presiding over the meeting. Next, officially calls the meeting to order. Next, guides the direction of the meeting and ensures the agenda is followed. Next, controls the order of the meeting. Next, maintains discipline. Next, signs the minutes of the meeting after confirmation. Next, calls for a vote of decision making. Next, gives a casting vote in case there is a deadlock in the voting. Next, adjourns the meetings. To adjourn is to proceed. So, duties of the chairman, we have them there. The next is duties of the secretary. Duties of the secretary. Now, duties of the secretary. 1. On the day of the meeting, the secretary must ensure that all stationaries minted by the members are available. These include writing materials such as pens and notebooks. Next, to ensure that there is adequate supply of water and refreshments. Supply of water. My secretary brought this one, but this is not a meeting. So, to ensure that there is adequate supply of water and refreshments. There's also water here, which was brought by my secretary. Submitting is a virtual meeting because I'm meeting you online. So to ensure that there is adequate supply of water and refreshments, next ensure that all the minutes for the last meeting are brought in the meeting. You've done the minutes. Ensure that the attendance record is available. Next, ensure that all relevant files are available. Next, prepare a notice to announce a meeting. Next, prepare an agenda, i.e., a list of items to be discussed in the meeting. Next, read the minutes of the previous meeting to members. Next, sign the minutes after acceptance. Next, prepare the minutes during the meeting, i.e., record of the meeting. Now, the duties and roles of the secretary can also be classified as follows. Now, these ones I've just present to you. You go through them. So you can either classify the duties of the company secretary as either duties before the meeting, duties during the meeting, and duties after the meeting. So you can just have this, because these are quite simple. They are straightforward. You just go through them. We have duties of the secretary. You have this. These are just okay. Duties and roles of the secretary can also be classified as duties before the meeting, duties during the meeting, and duties after the meeting. We have duties before the meeting. You can have this duties before the meeting, then duties during the meeting. Remember, these are duties of the company secretary. Then duties after the meeting. It goes on the other side. You have the last one. Participants. Duties and responsibilities. We have here duties and responsibilities of the participants. Continue here. Then after that, we are saying duties and responsibilities of participants. Should I see? Duties before the meeting. To notify the members through the notice of the time, date, and venue of the meeting. To prepare the meeting room. To prepare the minutes of the last minute and ensure that they are available. Communicating the resolutions of the last meeting to the relevant persons. Ensuring that all stationaries and equipment needed are ready. Ensure adequate supply of water and refreshments. Prepare the agenda for the meeting. Record all the absent with apologies. Deal with any pre-meeting questions. Those are duties of the secretary before the meeting. Then duties during the meeting. To advise on any legal matters concerning the meeting, availing the previous minutes, to note whether the quorum has been attained, to take notes as the meeting proceeds. Duties after the meeting. Duty to finalize the minutes for that particular meeting. Duty to clear the room. Duty to ensure that stationaries and equipment which should be returned to the office have been returned. Participants, duties and responsibilities of the participants. They form a quorum, i.e., the minimum number of people required to be present during the meeting. They contribute ideas and opinions. They elect officials and vote for meetings. They form subcommittees and they debate on motions. Now, I'll show you some examples here very fast. An example of a notice and an example of a minute. very first, you can look at an example of a notice. An example. Now here, an example of a notice is notice of a meeting. You have said for a meeting to be held, members must be given a notice. And if you hold a meeting, having not given notice to some members, that meeting is null and void. All resolutions passed are null and void. Now, there is an example of a notice here. Notice of meeting. A meeting of the company on the Social and Welfare Committee will take place in the boardroom on 20th April 2020 at 10:30 a.m. Items to be included in the agenda should be sent to the secretary to arrive not later than 5 p.m. on 17th April 2020. Samuel Gabuki, Secretary, 12th April 2020. Enclosure, minutes of the meeting dated 20th January 2020. This is an example of notice. An example of a notice. We have an example of a notice here. This is notice of meeting. An example of a notice is written this way. So we have, you can pause your video and you go through that. Then I'll move to an example of a minute. Example of a minute. You can go through an example of a minute. An example of a minute is here. The members present. Minute number 1, apologies for absence. Minute 2, preliminaries. Confirmation of the previous meeting. Minute number 4, matters arising. Minute number 5, financial report. Then minute number 6, proposal to purchase land. This is an example of a minute. These are minutes. Examples here. Okay, the members present. An example of minute. We have it there. I think it moves on the other side. Most probably it moves on the other side. And we have it there. The matter was put to vote. This is how voting took place, in support and against. Then minute number 7, election of our new secretary. They did continue here. And then minute number 8, A or B, any other business. Minute number 9, dates and time of the next meeting. Okay, minute 10, adjournment. Okay. You pause your video and you go through that. Is an example of minutes. So I move to agenda. So we have done agenda, but there are some additional notes here. Additional notes about agenda. We have additional notes here about agenda. And we have an example of agenda. Now, an example of you can have agenda here. But just check, we have discussed about the agenda, what agenda is. Agenda is here. Contents of, we have agenda here, then we have contents of agenda paper. Standard agenda items. Standard agenda items. Particular items, example. Now you can look at example of an agenda. Example of an agenda. Then it continues on the other side. continues on the other side. That example of agenda, it continues on the other side. And you have it there. So we end done agenda, and we'll see what agenda is. We'll say that agenda, this commonly applies to the agenda paper, which lists the items of business to be dealt with in the meeting. So the agenda discusses the matters now which will be discussed in the meeting. Will you be discussing about removal of a company, auditors, or appointment of new directors? Whatever matters to be discussed in the meeting, you find them in the company agenda. So this commonly applies to the agenda paper, which lists the items of business to be dealt with in the meeting. The agenda is an important document since matters of which appropriate notification has not been given can be dealt with at a general meeting unless they are of informal character and are only under the LOB heading. Agenda paper is also called order paper or the order of the business. It contains matters to be transacted at the meeting. Agenda is the summary for the business to be transacted at the meeting. It may include minutes of the last meeting, matters arising from the meeting, matters referred from one department to another, matters deferred from the previous meeting, correspondence received and requiring to be reported to the meeting. Contents of agenda paper. The heading, it contains the type of the meeting, time and place of the meeting, items of the business, then LOB, that is another business. The agenda provides the list of items to be discussed during the meeting and is usually attached to the notice. It contains standard and particular items. Standard agenda items: apologies for absence, confirmation of the previous minute, matters arising from the previous meeting, correspondence. This involves the review of any relevant documents, e.g., letters that are useful to guide the meeting, then any other business, LOB, and date and time of the next meeting where applicable. Particular items. These are the items of discussion for that particular meeting. Example of an agenda, I have shown that one to you. Then lastly, as we wind up, is protection of minority shareholders. Protection of minority shareholders. I've said this is something that we did last time, or in chapter 2, where we said we use the case in Banco Press, protection of minority shareholders. As you have seen, decisions in companies are made through voting. So meaning the majority shareholders will always have more influence when it comes to decision making. Sometimes the majority may make decisions which are oppressive to the minority shareholders. Like for example, if I have 90% of total shares and the rest have 10%, most of the times when we make decisions, when we vote, I will always be having more influence as far as the decision making of this company is concerned. So to ensure that the minority are not oppressed when it comes to decision making relating to the company affairs, there are certain guidelines or provisions which provide on the grounds or the basis on which the law should protect the minority. Now, we have done that one in chapter 2. You can just go to chapter 2 and look at that. But you can just present this very fast. Protection of minority shareholders. Refer the case in Banco Press. As a general rule, company affairs ought to be managed in a democratic manner in accordance with the articles and the law. As such, the majority rule prevails and the courts only interfere if the majority decision arrived at in accordance with the law or articles are actuated by bad faith or benefits the majority only. Company law attempts to champion minority interests through judicial propositions. Minority protection at common law. So we'll be looking at minority protection at common law and minority protection by statute. I've said this has been done. We have done this one in chapter 2. We covered minority protection in chapter 2. You can just refer to that particular chapter on our YouTube. Minority protection at common law. 1. Majority decisions made in bad faith may be challenged before a court of law. Number 2. Majority decisions made in contravention of the articles or regulations of the company may be challenged before a court of law. Number 3. Although company law cannot prevent the majority from voting selfishly, they must always do so in the best interest of a company. Majority decision must be set aside if its objects or purpose is 1. To benefit the majority at the expense of the minority. Number B. To facilitate expropriation of corporate assets. So you can look at the 3 ways in which you can protect the minority at common law before you look at minority protection by statute. So minority protection at common law. So we are looking at protection of minority shareholders. Protection of minority shareholders. Protection of minority shareholders. So we have, you can check from here. You can check from here. Then minority protection at common law. Just check these 3 points. Minority protection at common law. You check these 3 points here. And then you go to minority protection by statute. Either when the object clause is being altered or when there is variation of class rights, how we protect the minority under these situations. So minority protection by statute. You can look at 1 and 2. I'll move to the other page, which is number 3. You can just go through that. Convention of the AGM in case of default. Requisition of an extraordinary general meeting. Convention of general meeting pursuant to a court order. Investigation by an inspector or inspectors. Takeover bid. Winding up under the just and equitable grounds. So these are protection of the minority. You have set up to number 8. So I present it once again. Protection of minority shareholders. At common law, I think you're okay with the 3. Minority protection at common law. Minority protection at common law, you have 1, 2, 3. Then minority protection by statute when altering the object clause, when varying the class rights, number 2. Number 3 is convention of the NGM in case of default. The continuous number 3 here. Number 3, number 4, number 5, number 6, number 7, number 8. You have everything there. Okay, we have everything there. which is to do with protection of minority shareholders. We have said minority protection by statute and minority protection at common law. So just read minority protection by statute. Alteration of the object clause. Remember what object clause is? You find it in the memorandum of association. It states or it explains, it outlines the activities for which the company was incorporated to engage in. So companies must always engage in those activities which they were incorporated to engage in. Any other act outside that which these companies were incorporated to engage in is ultra vires and is null and void. So a company may wish to change those activities to incorporate other different activities other than those found in the memorandum of association. If a company wishes to change such, then there has to be voting, and the minority may not be in support of the same. So what will happen in that case? Alteration of the object clause. Under section 8, subsection 1 of the Act, a company may, by special resolution, alter the object clause of the memorandum. However, the proposed alteration may be objected to by the minority, one, holders of not less than 15% of the issued share capital, holders of not less than 15% of any class of shares, not less than 15% of the company members. So whereas the majority may pass a special resolution to change the object clause, we are giving we are saying that the minority may object to that particular alteration, and we have given point ABC. Number, the alteration may be cancelled by the court at the instance of the majority. So if they are not in support, if the minority shareholders are not in support of the alteration of the object clause, they can go to the court, and then the court may suspend this alteration of the object clause. Number 2, variation of class rights. Within the class rights, and we know what a class is. So if these rights are being varied or they are being changed, what's likely to happen? Variation of class rights. Under section 74, subsection 1, a company whose capital has been divided into different classes of shares may vary the rights attached to any class by special resolution or written consent of not less than a quarter of the holders of the shares. However, the variation may be disallowed by the court upon application within 30 days of the consent of resolution by the holders of not less than 15% of the shares who did not consent or vote in favor. Number 3, convention of AGM in case of default. Under section 1.1, subsection 2 of the Company Act, if a company fails to hold an AGM in accordance with the Act, any member of the company may petition the registrar to convene or direct the convention of the AGM. Such an AGM is duly constituted by one member present in proxy or by person. Number 4, requisition of an extraordinary general meeting. Under section 1.2, subsection 1 of the Company Act, an extraordinary general meeting may be convened at the option of the minority. The requisition may be made by holders of not less than 1/10 of the paid up capital or the total voting rights of the company. If directors could not convene a meeting within 21 days of the requisition, the requisitionists or not less than half of them may convene a meeting. Number 5, convention of a general meeting pursuant to a court order. Under section 1.5 subsection 1 of the Company Act, if for any reason it is impractical to convene or conduct a meeting in accordance with the articles and the law, the court may order its convention upon application by a director or any member entitled to attend and vote. Such a meeting is duly constituted by one member present in person or by proxy. You can see the exemptions are arising here. The exemptions to the rule in Sharp versus Dawes. Situations when one person may constitute a meeting. Number 6, investigation of an inspector or inspectors. Under section 165, subsection 1 of the Company Act, the High Court may appoint one or more competent inspectors to investigate the affairs of a company upon application by the members. The application may be made by 1, not less than 200 members, number 2, holders of not less than 1/10 of the issued shares, number 3, not less than 1/5 of the number of members in the registrar. Number 7, takeover bid, where the majority has formed a new company to enable them acquire the minority interest. The dissenting shareholders may petition the court within 1 month of the notice for cancellation of the takeover bid, and the court may disallow it. You can refer to the case in Bango Press about takeover bid. Lastly, winding up under the just and equitable grounds. Under section 219, subsection 1 of the Company Act, a company may be wound up by the court if it's of the opinion that it's just and equitable that the company should be wound up. The minority may instigate the winding up of company on this ground in case of oppression or where they have justifiably lost confidence in the management of the company affairs. And that marks the end of chapter 7 of company meetings. So we are through with that. So next time we'll be moving to chapter 8, and that will be company directors. So remember, in chapter 7, which is about company meetings, we have a specific case, which is the case in Sharp versus Dawes. Understand exemptions to the case in Sharp versus Dawes. Now, in chapter 8, which is about company directors, we have a case now known as the Dawes case. The Dawes case, you have it in chapter 8, company directors. So because of time, I think we should stop at that. In case you need any of my numbers are 0727 8710 and 3 plus 254 78710. If you are following from foreign countries, 0727 8710 and 3. My name is Kimanzi of FATIMA Training Institute, Center for CIFA Studies. So remember to subscribe to our YouTube channel so that you may continue to get these classes as and when we upload them. So can we leave it at that? I think so. So we meet next time as we take up company directors. Remember to look at the case in Dawes case, or in Dawes management, what it entails. So in case you need any clarification, my contacts are just there. So we meet again. Thank you for viewing.